Good morning, Fractal Effects team. Sorry for the delay. We were having some technical issues. Please make sure you read the disclosure on fractaleffects.com. Since we're in the middle of the morning session still, we'll just continue on. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Today being FOMC, we're actually moving forward with caution. I don't expect to get clean price action, but this is a great example. This is something you want to study. When you're in a demo account, it's great to study these days to kind of show you why they're best to just avoid. But everything is pointing down. We have a blue zone sell model. The only thing that's against our confluence is we do have a upside expansion model from the spotlight strategy. But everything else is down. Previous day candle hit a daily fair value gap and wicked. We have a double break to the downside. We're going to use Brent crude oil as our diverging pair. So we've had a double break on both sides. We're getting close to getting our bearish confirmation. And once we do, I want to pull back into one of our key zones. There's a purple zone here. I want to take out these highs. There's your NYC fair value gap, that red one that's right inside. But like I said, I'd like to take out these highs. Now you did have a bit of power of 3 happening here too. Consolidation, manipulation. So anytime you see this kind of a consolidation and a push up, it could do a deeper retracement into the DSD low right here. But either way, I want to see a pullback, and then I want to see a 5M bearish fair value gap being created. But other than that, we do have our bearish confirmation now. Here comes our 20 EMA right inside the NYC fair value gap. So this is going to become a very, very key zone. We can knock out all of these at the same time. I still would like to take out this this high here though. So I don't really want to see the market retrace past the midpoint of the DSD low right here. And again, this is US oil we're looking at here on the left, Brent crude on the right, just as our diverging pair. I wouldn't really be interested in trading NAS today. Just want to make sure you proceed with caution. Reduce lot size. Excuse me. And there's a nice 4-hour fair value gap right down here. That'd be a good target. Also our new week. Change the color of this. Change it to green. I'm going to play around with the indicator. Pick the colors that you recognize immediately. You know, whatever it might be for new week opening gap and new day opening gap. Let's see if we get that full retracement back right now. This is our area of interest, but again, we could wick as high as up here. New day opening gap is in there as well. New day opening gap, DSD low, and a purple zone, not to mention sweeping out these highs. That's what I'd like to do before pushing down, but let's see. NYC was such a small, pretty much consolidated, and I was expecting that. Usually there's anytime you have FOMC in the afternoon, you'll see a tight consolidation. So we haven't even touched this fair value gap yet. Change this color out. Again, if this thing takes off without us, that's fine. On a day like today, I need to see a decent retracement. And you usually get one. Now usually you get a retracement right after a double break, and you get a retracement after a bearish confirmation, bullish or bearish confirmation. So both of these side by side doesn't always happen. That's our double break candle from the blue zone, and here's our bearish confirmation from the spotlight strategy. So I want to see a decent retracement. If this thing just decides to keep going, then it was never meant to be. Or we don't chase the market, we stalk it. There's a difference. Lions wait in the tall grass until the antelope are right in range. They stalk it. If they just got up to chase it, and all the antelope would just run away. Proceed with a scalpel, not a machete. Brent crude oil coming right into the new week opening gap. There's previous day's low, that yellow line. So it's already tapping it, but it could use this to push it back up. This could be giving us our retracement. So one of our key zones is right here, the NYC fair value gap. It's become an inverse. You can see it right there under this fair value gap here. So it could bounce off of this. But as mentioned before, I want to see a retracement first. Then I want to see a 5M bearish fair value gap created after the retracement. That's how I know I'm not ready to make that move. Because right now we haven't even had our retracement. First the retracement, and then a 5M bearish fair value gap tapped, 1M bearish fair value gap created and tapped. That's when I'm ready to make that move. With the targets being that 4-hour fair value gap right here. Because that's a big new week opening gap. Now some people would aim for the midpoint of it, which happens to be also previous day's low and another 4-hour fair value gap here. But as mentioned before, on a day like this, we're aiming for the low-hanging fruit. We just want to make sure there's a 1 to 3 there. Well, let's say our bearish fair value gap forms somewhere here. My stop loss is usually the retracement leg, like the spike of the retracement leg. So that's the other reason I'm waiting for it. Without that retracement leg and that spike into one of our key zones, and then a 5M fair value gap created, bearish fair value gap created, I don't have my stop loss until that spike is created. None of these are my stop losses right now. So we'll keep this off to the side, and then once we get that spike, we'll be able to better assess this. Till then, just being patient. Again, I don't consider this a retracement. I want to see it get up here. This is our first key zone. Anytime you have a runaway, a breakaway gap, anytime NYC becomes a breakaway gap, meaning it's never filled at open, then you can use the next fair value gap that's created, especially if it lines up with the 20 EMA. But if it's already been violated and wicked, I'd like to see it at least tap here, if not, again, sweep these highs. we had this candle right here close completely above, and look how high it wicked, right into the DSD low. So it's already disrespected the NYC fair value gap. So just stay patient. Another thing that I like to wait for to let me know, sorry, 1 second. Another thing I like to wait for that lets me know that the retracement is done is one of two things. I like to either see a bullish 5M fair value gap created, or an immediate rebalancing candle, which is an engulfing candle. So you'll see the market hit that key zone, and again, we either left a bullish fair value gap along the way, which we'll also use as an inverse to verify our push down, or it hit our key zone without leaving a bullish fair value gap and then created an immediate engulfing rebalancing candle. That means as soon as it hits our zone, the next candle engulfs it and rebalances that price range immediately. Then we wait for that bearish 5M fair value gap. But when I see that, then that rebalancing candle becomes my 2 ticks above that becomes my stop loss. Obviously, I wait for the bearish fair value gap to be created and my entry to be confirmed before I obviously set that stop loss. But so I want to see this bullish fair value gap stay open, or I want to see an immediate rebalance right here because we are at the New York fair value gap. But again, I actually see the market going higher than this. Nothing's changed. We're still bearish. We're just waiting for that retracement, and now waiting for our foothold, our 5M bearish fair value gap to be created. Can't enter a market without a foothold. Can't climb a mountain without a foothold. Just trying to see if there's a fair value gap created in here? No. This is good. This is what I wanted to see. I wanted to see a decent retracement. Just going to go up to the 4-hour here for a second. Yeah. So there's, remember, we're sitting inside of a 4-hour fair value gap. But I don't expect a full retracement here. Top of our manipulation range is right there, that green line, right at the blue zone. But since we've had a double break and a bearish confirmation, now given the fact that this range is small, as far as the spotlight strategy is concerned, this thing has already been invalidated. We've already broke the range to the upside right here. That was the upside, the top side to the spotlight New York session dealing range. So this trade's already been invalidated. But since there's 22 minutes left, I'm not looking at any other asset today. I want to see if the blue zone strategy still comes through. This is not a trade I'd be taking regardless now. Looks like it's making its way up right here, and there's a 15-minute fair value gap in here. And here's our DSD low. Now let's see if it wicks off of this. Excuse me. When you have a bearish confirmation and you have a double break, and all your higher time frame analysis is telling you that this thing wants to push down, then you can do one of two things. Either look for that sell within your window of opportunity, or stay out completely. You're not going to suddenly switch your bias to buy. Even if this thing breaks the top of the manipulation range and gives me a double break to the upside, I'm not changing my bias today. I just stay out then. That's the final invalidation for me. Because the 10 o'clock candle is usually a continuation candle. We bounced off the daily fair value gap. We had the 6 o'clock candle be an expansion candle, and now 10 o'clock candle should be a continuation candle right into this 4-hour fair value gap. So let's see if this becomes our immediate rebalance, this next candle. We have about 3 minutes 58 seconds. If this is our immediate rebalancing candle and I get a bearish fair value gap here, I'll follow it as a mock-up. But again, you gotta stick to your rules. I've been over this many times. I've seen numerous trades where I can see where the market is going still, even after an invalidation. But the reason we use these two strategies together is because these are the most back-tested strategies out there. We're talking 2 decades of data on the back end of the dashboard of Spotlight. 2 decades of data. You don't just throw that out the window. So if one of your strategies is saying, hey, it's an invalidation, and the other one's saying, no, this is exactly what it's supposed to be doing, even if there's a 1% chance you might get hurt on a particular day, avoid heading out, avoid doing that activity. 1% chance of being hurt is enough for me to just avoid something completely. Especially when it comes to the market. Maybe you want to take those risks in life, which is up to you, but in the market, if you see that certain things are just going against you, Spotlight, invalidated. But again, we'll still show you how the blue zone strategy would have fared. So we're close to getting 2 minutes left. I want to see if this is an immediate rebalancing candle. 5-minute bearish, 1 bearish, and then we'll see if we ride it into this. But this is not a trade I would ever take, just because it's going against the second strategy. Even though, again, once I get all those confluences I just mentioned, if it was any other day and I didn't get that, I would easily take it. And I'm still confident that it's going right into here, but that's just my rule. That's how I avoid FOMO. That's how I avoid feeling bad. When this finally does hit into this zone, am I going to feel bad about it? No. Because I stuck to my rules. It's the rules that are important. That is a beautiful rebalancing candle. I want to see where it closes. As a matter of fact, I think we'll probably even go into this bigger 4-hour fair value gap, because we didn't have any lows on the 4-hour. This is all one leg. So the 4-hour low is actually down here into this weekly fair value gap, this green one. Make sure you mark up your fair value gaps, the higher time frame ones. Pick a color that you recognize. For me, daily is yellow. Purple is 4-hour. Green is weekly. Immediately, I see it and I know exactly what that is. Aqua is 15. That is a beautiful rebalancing candle. But still, I want to see a 5M bearish fair value gap created now. So if this closes as a rebalancing candle, I don't need that 5M bullish fair value gap here to be used as an inverse, because that becomes now the rebalance, and that would be the stop loss. But in order for that to be the stop loss, right, now this is where our measurements come into play. So in order for that to be my stop loss, my target hasn't changed. My entry still has to be here. Oh, I don't want to make this too big. So to get a, yeah, see, that's a 1.72. That's the low-hanging fruit. So this might not even give us the juice that we want, because that's my stop loss. Any way you cut it, that's going to be my stop loss. Even if I get a 1M entry, that's my stop loss. That's as high as the market can wick after it gives us our 1M bearish fair value gap. But let's see where it's created. Still 3 minutes left. I want to see this fair value gap stay open. You don't make a single move until there's a 5M bearish fair value gap created. The next iteration of the indicator that we're working on will literally have that information in the right-hand corner for you. It'll have percentages. Every day somebody approaches me and asks me, can we make the strategy even easier? Even easier, even easier. It's as if they literally want the entire screen to flash and say, enter now. So we'll see how much easier we can make it for you guys. Yeah, you'll see percentages in the corner. And obviously those are based off of statistical data. It'll tell you nothing's 100%. So it'll obviously never say 100% that the market is going in this direction, but it will play with probabilities. It'll tell you 70% probability that the market is going to go down. And it'll give you the steps of what to look for. 70% chance that the market is going to go down. Look for a 5M bearish fair value gap. And then as soon as the market taps that, you'll see a change in the right-hand corner. Now look for a 1M bearish fair value gap. And then as soon as that's tapped, you'll see the next step. It'll literally have step by step in the right-hand corner for you. And it'll be giving you the percentages along the way. That's the next iteration that we're working on for you guys. We couldn't have made it more easier. Forget holding your hand. We're literally going to lift you up and carry you there the best we can. Can't take the trade for you. Remember, our goal is still to teach you how to do this. You have to be able to understand why the market is making the moves it is. That's up to you to understand. Our job is to just give you the best data that we can, the most amount of information. So this fair value gap looks like it's going to stay open. We got about 47 seconds left. That's exactly what I wanted to see. That's now my area of interest. There's the 20 still drifting, 20 EMA. Now we got to hit this 5M fair value gap and create a 1M fair value gap. Let me make sure this is accurate. Zoom in, see? Want to make sure the fair value gaps. Luckily the indicator paints it out for you, but you want to mark them out so when you drop down to a smaller time frame, you can actually see it properly. Same thing over here. Brent crude oil, I want to mark them both up. Here's the other thing about divergence. If one pair gives you a 5M fair value gap and the other one doesn't, concentrate on the diverging pair. Try to see if the strategy sets up over there. They'll most likely both push. They're going to both push once that zone has been entered and that setup has been created, but one might not even give you the 5M fair value gap. That's why you need to be looking at that diverging pair, because then it's like a secret fair value gap that you can't even see over here, but it exists. Because the market's going to use it. And both of them are going to drive off of it. Now we just need one more step. It has to hit this and create a 1M bearish fair value gap. If it keeps dropping, then so be it. Remember, we're already invalidated. We're already not interested in this, but I'm going to follow this one through just to show you guys. We got about 9 minutes left. Let's see if we can't get that push. Since you're following along in a demo account, and make sure you are, and you can feel safe actually trying this one out. But as mentioned before, it's only a 1.72. So on the 1M, when we enter, I want to see a definitive entry point, and maybe that might allow me to move my stop loss down from up here. But as it stands, that's the stop loss, that's the target, and that's only a 1.72 for now. Let's see if that changes. 8 minutes left. We have FOMC later in the afternoon, about 3 hours, 2.5, 3 hours. If it wasn't for this invalidation, as mentioned before, this is actually not a bad setup. We took out these highs, exactly what we wanted. We have a double break, we have a target, we bounced off the DSD low, we have our immediate rebalancing candle, we have a 5M bearish fair value gap, we went back into one of our key zones. There's really only one step left, but that's a big, big invalidation. Like when you're looking for all these confluence points, being invalidated on the spotlight strategy is massive. Just gonna get rid of this line here so I can see this properly. Now one of these has to tap into this. If you're following along with us, since we only have about 6 minutes left, this is now your homework. You can either check this later, come back and see exactly how it performed, or you can stick with this if you have, it'll probably take another about 5-10 minutes if it's going to actually come into this fair value gap. But I want to see if it comes into this fair value gap, and then you drop into a 1M, and then we want to create a 1M bearish fair value gap, which also gets tapped, and then a closure over a series of candles, etc. All of those steps have to be met. And if you get that, this would be the target. Or if it takes off without us, it takes off without us. If it creates another 5M bearish fair value gap, again, all it's doing is making that run shorter and shorter, that entry point shorter and shorter, where your risk to reward doesn't make any sense, right? Because your stop loss is still up here. If it doesn't tap this, your stop loss is still up here. It has to be, because this is the highest fair value gap. When we tap this, and you get that 1M bearish fair value gap, then so be it. Then at least you can maybe move your stop loss down. But if another fair value gap is created here, and then it just keeps pushing down and pushing down, it could tap any one of them or come all the way back up here and tap it. Right now I'm not liking this price action, and it could take probably, again, another couple of candles before it even comes back in here. So that's the homework for the day. We'll follow along for this last candle. That'll take us to 11:30. Please make sure you check us out on fractaleffects.com, where we teach high probability trading. Make sure you hit the subscribe button, turn on your notifications so you know when we're live. We'll be live again tomorrow. And then when FOMC drops, as mentioned, in the next about 2.5 hours, see what it did to the market. Take a look at NAS, any of the indices, and you can see why we avoid those days. NAS is doing nothing different than this. Like here, we could even take a look right now real quick. NAS, everything's pushing down. There's our manipulation range low. We wicked it, had our double break, pull back. There was the fair value gap that was created, not tapped, dropped, another fair value gap created, not tapped. Now it's consolidating here. Usually a consolidation leads to a continuation, but we've already hit the end dog, and it could pull back at any point and use one of these fair value gaps before it continues. That could be the manipulation. So consolidation, manipulation, extension. But again, as soon as that news drops, go in either direction. 1 minute, 30 seconds left. Again, looks like it's making that push without having tapped. It never gave us a foothold, right? This is our foothold. This is us stalking the market. This would have been chasing the market, just jumping in, hoping to get a piece of it. As mentioned before, as soon as I see this, I know where it's going. Doesn't mean that I'm going to be able to take it. Doesn't mean that my risk to reward is going to make sense. Let's go back to Brent crude oil. See if that's already hit its target. So it's deep inside the NWOG now. I haven't marked out the 4-hour fair value gap or the equivalent here. That's another way to use divergence, by the way, is if one pair hits its target, sweeps its liquidity or whatever, hits the fair value gap, the higher time frame fair value gap, and you happen to be in a trade in the weaker pair that hasn't done all that, use that as a sign to exit the position. Doesn't mean that this one won't get pulled up there as well, but it also means that maybe this the other diverging pair just wanted to take liquidity and or tap that fair value gap. Because if one of them has reached their target, it means technically you can say they both have, and the market could reverse. That's another way to use divergence. Every single time, if I enter a trade and I see the diverging pair hit that liquidity point or hit that fair value gap, I'm out of both. Like, I exit my position, even though my pair hasn't done that yet. It's another way of being safe. But anyways, that's our time. You have your homework. That would have been the entry right here, but unfortunately the market kept pushing from us. It might still come back in, but it's going to be definitely past our window of opportunity. So we'll see you guys tomorrow. And once again, please hit that subscribe button, turn on your notifications. If you learned anything, please hit that like, and we'll see you guys tomorrow. Take care.